Turn around. Every now and then I get a little bit lonely when I'm looking at the stocks alone. Turn around, bright eye. Couple things to look at here. Got our 5 credit spreads on the SPY 410 slash 412 that expires at the end of today. It's currently showing that it's down 83%. And the reason is because SPY keeps trying to threaten me. Are you threatening me? My name is Cornholio. So we're at 408.67. We put that trade on. When did we put that trade on? We put it on right around here, and it didn't get filled right away. So it fell all the way down. And then when it got back up to, I think it was probably about 47.50 in that range, it did fill. And then you could see what SPY did from there. Just like, hello, everybody up. Put your hands in the air, wave them like you just don't care. It was all the way up to 408.78, and now currently at 408.71. So it's still threatening my position of 410 with 2.5 hours to go in the trading day. It is currently 12:30 p.m. on the Central Standard Time, so we'll keep an eye on that. Also, what I was looking at, I think I told you that I was probably just going to let these Google calls go, but you know how I am. I'm a flip-flopper sometimes when it comes to my thought processes, and here's why. So I clicked through. We've rolled this a couple of times, right? Our position on Google, let's go back to the Googler just to show our position. Our position is an average cost of 92.47, so we're going to be doing just fine. Either way we look at this, we'll be doing just fine. We've got that 98 call. So we've got two 98s and a 100 because we've rolled that one out as well. If we look at these 98s, can we do some quick math to determine that we can roll those out, collect more money, roll them out, collect more money, and do it in a time frame that makes sense from our annualized return? So if we roll this position and we look out, I was going to look at 2 weeks out. So it would be 2 weeks from, well, 2.5 weeks. It's 18 days out. 18 days. We need to cover this debit. So that would be our debit, $8.95 debit. We'd have to go down to what? Yeah, that's what I was hoping. Was hoping we'd be able to cover it and make a couple dollar bills and roll it up another dollar. Okay, so if we roll it up another dollar and we're still well under current price of 106.79, but we would be rolling from our 98 current strike price up to 99. So we'd collect a dollar per share on 200 shares because we got 2 contracts on the line representing 200 shares. That'd be $200 in additional profit plus $134-ish in the credit. So if we look at the math, right? If we look at the math, and remember our cost basis is 92.47. So that's what our math would be based on. We would be at $130 plus the $200 from it rolling to a 99 strike. We would add $333 of potential profit to the equation, and then we would have to divide that number. I'll do a little side math here. So 92.47 times 2 is $18,494 in collateral based on our cost basis of those 200 shares. So we would divide that by 18,494, come up with this number, which we would then divide by the 18, and that's as of today, divided by 18, and then annualize it by multiplying it by 365. So we'd be at 36.1% return on capital regarding the Googler. We'd still have a high probability of having those called away at $99, but it's better than having them called away at $98. So let's try to do that. When, Bart? When are we going to do it? We'll try to do that right here and right now. Let's see what we're looking at with regard to the potential fill. Oh my gosh. Oh, wow. Look at the difference between the bid and the ask. That spread is enormous. So is it possible to fill it at 73? Collect that $146 credit? Now at 70, with a low likelihood of filling, 65 cents, $130 credit. Let's just see if it's possible. That might just go up on the pending board, or because of the amount of volume, it could fill. And I think it may have filled. Let's make sure, or let's check it. Check, baby, check it. Showing it up on the board, but sometimes that's delayed. Let's update and see if it's still in the pending board. He's still up there on the pending board in the farm fields of Valparaiso, Indiana. So it's still up there. We'll keep an eye on it for now. What else was on here? Is there anything else on here that we wanted to look at right now before we move on? Before we move on, we've got this Tyson $55 put that expires on 4/21. It's stating that it's 88% in the profit. Let's just look at the numbers to see what the difference between the bid and the ask is. It's still a pretty wide spread, considering it's between 5 and 10. Worst case scenario is 10, but we would be able to get that filled for less. We originally collected $70. It's a $55 put, and Tyson's at $60.83. So we'll probably just let that ride for now. Also, looking at another quick look at the SPY, 408.53. Still hanging in there as far as our trade is concerned. Exxon Mobile, where are you at? Exxon Mobile is at 114.67. Could be a time to enter some selling some puts on here, so it's going to look like it's going to go down green. Let's look at Exxon Mobil, X to the O to the M, Exxon Mobil, and what we can see on a 4-day to expiration trade, and then also on an 11-day. 11-day may be more to my liking with as far as just risk management. So if we sell a put and we're looking at 4 days out, April 14th, we'd be at the 104 on the 114, but it could easily plunge through that number. 70 or 69% chance of profit. If we go out another week, if we go out a week from Friday, 11 days out, then we'd be at 106 on the 112. So we'd be $2 lower on the put. Obviously, an annualized return would be less, but also that risk becomes less as well, even though it's just, what's the delta? It's still just about a 30 delta on that action. And this is a 41 delta. Hello. 41 delta. And what would be part of the caveat would be the market, the actual market moving itself, that if the CPI number comes in on Wednesday that the market doesn't like, it could certainly drag ExxonMobil down with it through our strike price. And then we're assigned those shares at 114, which isn't horrible, because we could immediately then deploy the wheel of fortune strategy. Another thing I was looking at was Arbor Realty Trust. It's downtown to Chinatown today. I'm wondering if there's just a super short-term play. I'll see, it's already come up from its low of the day, which is $10.27. It's come up a lot since then, actually, when you're looking at a $10 stock. Arbor. I like Arbor Realty Trust. I know the REITs are under pressure because of those interest rates. Arbor has a big exposure to multifamily, which, I'm a big fan of multifamily. Owned a lot of it in my life, and still own 10 rental properties. That's the lowest we've owned in 20 plus years, but I like it. The less, the better. Why, Bart? Well, sometimes those tenants make my butt stink. And at my current position in life, I need less stress and more joy. So that's what we like to do. That's why we've decreased our position in multifamily rental properties in general. We love real estate, always will. Real estate sales coupled with real estate investing is still and will be, probably for a long time, the greatest small business opportunity in the world. So if you are a young person considering what's a place that I think an average person can have a high probability of success and then wealth, it would be real estate sales. Get your real estate license. Tune into my old real estate podcast called Real Estate Good Life. Go through every episode. There's almost 300 of them. And as you can tell, I'm certainly not a professional voice, but I do have an expertise in real estate. Not yet in stocks and options and dividends, but I'll have it soon. I'll keep trying. But real estate sales, real estate investing, two of the greatest small business opportunities that can ever exist for a regular person. And that's why I was able to create the limited amount of success that I've had, because I am certainly just an average person, as you can tell by the words and the mistakes that I make here live. What were we doing? Oh, yeah, we were looking at Exxon Mobile. You like your little tangents, don't you? Let's see. It was down to 114.60. You missed your little spot there because you were babbling on. Now it's up to 114.68. That's okay. Exxon here. Let's look at that 11-day again. 105. 105 on the 112. It's close. I mean, that's still on a asset that you wouldn't mind trading and certainly wouldn't mind wheeling. It's only 11 days out. Let's do the quick math again. 105 on 112. So $1.05 divided by 112 equals that. So almost 1% in 11 days, but we will divide it by 11. Give us this equation. Multiply that by the 365 to annualize it, and we're at 31.1%. And we know Exxon pays over a 3% dividend on an asset that I think isn't going anywhere anytime soon. All the big oil companies not going anywhere soon, despite what the green energy people would try to tell you. Green energy, in my opinion, still not quite there. I mean, I remember when I was a kid and neighbors were putting up solar panels on their roofs, and they still, after all these years, still haven't perfected or even come close to perfecting how to get that solar energy efficiently into electricity. So, got that going for us. All right, let's just check it out. 112 on the cash secured put. Let's go for $1.08. We're not going to be greedy, but an extra dollar here and there. It always matters. Review this order. Cash secured put, which means I'm agreeing to buy 100 shares of Exxon Mobile, $112 on or before April 21st for a $108 credit on an $11,200 collateral. So that should fill right away. Hold your breath. Where are you at? Oh, they changed the bid and ask on me. That's why. So that means that Exxon is going up just a little. It'll be fine. I think I'm pretty confident that'll fill today. And what's SPY doing too? It's currently doing us a favor, going back down to where we need it to be a little more comfortable. So that trade should be looking a little better on paper. Still going to be in the minus, according to what these statistics will show us. Well, no, it's not in the minus. It's at exactly break even right now, 0%. That Google covered call still on the board. Do we need to adjust that right now? Let's see what we have to do. We had 65 cents on the board. What do we have to do to get it filled right now? And we were at the 28th. Is that correct? Yes, indeed, Bart. Let's go down to that 99 strike to cover that debit. Now it's at a now it's way down, isn't it? It's at a credit. That's why it's not even coming close to filling. What is Google doing to us right here? Google is probably making a recovery. It's at 106.54, and we're trying to sell a 99 put, to cover that big debit that would be required. So there it had its push up right before our very eyes, and that's why that didn't fill. So the Google, now it's down to 35 cents per. So a total credit of 70. That'd be 32 cents going down as we speak, coming close to a break even. Not interested in a break even, really. I'm really not. We add that $1 per, which adds $200 to the kitty over 18 days. But if we just allow it to be called away now, it would be called away on Friday, right? We'd put that $98 or, as $9,800 times 2 back into our pocket to deploy where we want it to be deployed. So we'll just keep an eye on it for now. If Google gets back up to a little bit higher net credit like we were having before, then I would definitely jump back in on this. Man, back to Arbor. Take a quick look. Yeah, it's still going up from its low of the day. I should have done something right through here just because I felt for sure it was going to bounce, whether it was a day trade or not. We could have made a couple dollar bills there because we have a large position in Arbor. In fact, how large is it, Bart? Our Arbor Realty Trust position, it's like 4,000 shares, I want to say. 4415. So we have 4,415 shares. And our current position, look at that. Our total return is down $13,000 because it is at almost it's almost at 52-week low. In fact, let's look at it here. ABR, Arbor Realty Trust. Hopefully you can still hear me. I haven't listened to anything back yet on the newfangled microphone setup, but let's look at the 52-week range. So there it is. It's between $10.26 and $17.79 for the last 52 weeks. And you can see right here, it's at 1065. In fact, today I think was that low. Yeah, so there was its low, 1027. So today had an opportunity. Doesn't mean it still doesn't exist. Arbor can go up a buck tomorrow. Let's look at 5 days. So it was up here at, let's see, April 6th, it was at $11.26, and then it dropped down to that 1027, and you can see the volume down here at the bottom. You see how high the volume was on those times as they keep a ticking. Back to the SPY, 408.48, still doing fine there. Up here, we got that Exxon Mobile. Hey, that still hasn't filled. What you waiting for? We'll keep an eye on that. In the meantime, Kid 3, who slept in like a big Rip Van Winkle, is looking for some food, so I better go take care of that. And in fact, I need a meal myself, so I'll check back again, I'm sure, before the day ends. Less than 3 hours to go, so 2 hours and 14 minutes remaining on the Swatch Watch trading day, and I'll see you in the next video.